property sector in Africa and financing for property remains an industry under pressure, especially in the wake of the economic challenges brought about by COVID-19 lockdowns across the continent. Joining me to discuss this is Gerhard Zeelie of Nedbank CID. Gerhard, thanks very much for joining us. How did the financing and capital structure of property developments change across Africa in light of COVID?
Hello, Gary. I think it makes perfect sense to assume that it became more conservative, and hence those capital structures are slightly more expensive to deal with the fact that it's a little bit more risky. Specifically, debt finance has become a little bit more expensive, but on the other hand, we also saw a sharp drop in the LIBOR rates, which to some extent buffered that increase in pricing for the risk.
Now, you mentioned that it has become in some cases more expensive, but across the board, has it only become more expensive, or are there still opportunities and in some cases some offsets against that expense?
I think there are definitely opportunities. Obviously, some subsectors offer better opportunities than others. I think sort of everybody's waiting to see how the office market adapts to a post-COVID environment. But certainly the industrial sector is doing very, very well on the back of more online shopping and better logistics services being introduced across the continent. So there are definitely opportunities, and I think there would always be place for debt in the capital structure of any property development.
What are the key attributes that a debt financing structure for new developments, for instance, now should have given the current economic uncertain environment?
Definitely the key thing would be flexibility. What COVID taught us is that it is very, very difficult to predict the future. And currently, even now, I think a lot of people are trying to model or sketch different scenarios around what would happen to the property sector in Africa. But I think it's still very much impossible. So in order to move forward, you need a debt structure that is flexible to cater for exactly that thing that you were not able to plan or scenario plan for.
Gerhard, did banks adjust their appetite to fund properties on the continent? And if so, how?
The answer is very simply yes. I think, though, it's very, very important to understand specifically from a Nedbank perspective that we still have appetite to fund projects in Africa. And I think that is very, very key. We adjusted our appetite in terms of gearing. So where we typically would have geared at a specific value or level, I think we have dropped that at the moment to gear at slightly lower levels compared to a pre-COVID scenario.
Gerhard, and in terms of the broader property market in Africa, what are the trends showing? Here in South Africa, for instance, we see a lot of companies looking at their property portfolios differently because of work from home dynamics, etc., and corporate environments where you used to have a very large retail or business tenant environment starting to change. What is the trend in the rest of Africa, outside of South Africa, as far as the property sector and industry is concerned?
Yes, so in some sectors, I think it's very similar to what we're experiencing in South Africa. Again, not spending too much time on it, but the office market is certainly under pressure. One thing that's a little bit different from the office market in Africa is that not in all countries you have infrastructure with the right type of internet bandwidth for people at home, or even access to power that is fairly certain that there won't be breaks during the day. So in Africa, I think the office market is doing a little bit better than in South Africa, because working from home is not all that easy. I think the retail market, shopping malls, pretty much the same. People need access to goods and services. And then we've really seen that the industrial market has shown a lot of potential, like I explained before, with the logistics business and online shopping businesses really becoming to flex their muscles and becoming more important in all of these countries. And then the one interesting one to look out for is hotels. Without a doubt, business hotels in Africa would see a return. To what levels of occupancy, that remains to be seen, but people will still need to travel to do transactions and meet people and build their networks from a business perspective.
Well, that's where we're going to have to leave it. Thank you very much for that, Gerhard Zeelie of Nedbank CIB, and for that talk on the property sector in the rest of Africa. Thanks for joining us.